Hello viewers and welcome to Business News from Mumbai. I'm Madiha Mujawar. In the next half an hour, we'll bring to you the news from the world of business and economy. Let's see the news in detail now. And Finance Minister P. Chidambaram said yesterday he saw no reason for companies that fulfill all RBI criteria should be denied banking licenses as part of plans to shake up the country's bank sector. The Reserve Bank of India is expected to issue final rules on new banking licenses to private entities within a few weeks, but many, including the International Monetary Fund, oppose allowing industrial houses to set up banks, fearing it could lead to misuse of funds. The government believes that opening the sector will pave the way for the creation of some world-size banks and that deep-pocketed corporates will be able to provide much-needed capital for banks. And trade between India and Pakistan resumed yesterday over the de facto border in Kashmir after a 20-day halt. 6 Pakistani trucks crossed into Indian-administered Kashmir, ending the halt in trade sparked by brutally killing 2 soldiers earlier this month. A similar number also crossed over from Poonch on the Indian side of the LOC to Rawalkot on Pakistan side, with dozens more trucks waiting to make the same journey. Cross-border trade has been encouraged in recent years as a means of improving relations between 2 neighboring countries. Earlier, the bus services between 2 sides resumed on Monday. And after a long time, we have some data on the gems and jewelry sector. India's gems and jewelry exports declined 17.9% in dollar terms and 4.65% in rupee terms in 2012 amid stagnating demand in West Asian and European markets. The decline in dollar terms was partly set off by the depreciation in the rupee.
India's gems and jewelry export declined 17.09% in dollar terms and 4.65% in rupee terms in 2012 amid stagnating demand in West Asian and European markets. The decline in dollar terms was partly set off by the depreciation in the rupee. Gems and Jewelry Export Promotion Council data showed that overall gems and jewelry exports fell to $38.3 billion in 2012 compared with $46.2 billion in the same period last year. The rupee averaged at 53.49 against the dollar in 2012 compared with 46.68 in the same period last year. After a dwindling first 6 months of the current financial year, golds and jewelry exports started recovering gradually in October, with stockist order flowing in from the US for Christmas, New Year and Mother's Day celebrations. Since these 3 occasions constitute around 40% of overall annual jewelry sales in the US, neither Indian exports nor American retailers look to miss the opportunity. While the US alone comprises 11% of India's overall G&J exports, West Asia constitutes 48%. Hence, Indian exporters are scouting to expand their footprint further in the West Asian market in addition to exploring new markets like Australia, Romania and former Soviet republics like Commonwealth of Independent States. Japan is another destination which Indian jewelry exporters are scouting for high-end ornaments. Jewelry exporters are also betting big on the growth in the domestic market this year after the government took a number of reform measures to bring the economy back on the growth path. Struggling to overcome the sustained fall in export turnover, diamond jewelry manufacturers have urged the government to implement the benign tax assessment procedure with 2.5% ad valorem income tax levy on declared turnover. Currently, the government considers 6% as net profit on the turnover declared by jewelry exporters, on which 30% of corporate tax is levied. Bureau Report, TD News, Mumbai.
All right, now our market analyst Dr. D. Sundarajan joins us to talk on more on the markets. Dr. Sundarajan, thank you very much for joining. We see that the market is not rejoicing, enjoying
Hello.
the way it. Yeah, Mr. Sundarajan, thank you very much for joining. Can you hear me?
Yeah, I can hear you now. Yes.
I'm asking that the markets were expected to, rejoice the RBI rate cut, but they're seen very flat. It's very surprising.
See, a few things are there. One is the expectation from the market side was on the higher point, like they expected most of the people a 50 basis point cut, whereas what came was a 25 basis point cut in the repo rate.
Talking about Asian markets, I think Asian markets were also subdued in today's trade.
Again, these are very minor day-to-day variations, nothing great to talk about. Overall, now that the new year has begun, you can expect a lot of foreign institutional money to flow into the emerging markets like India, etc.
Okay.
So that flow is yet to commence. Once we see that flow, we can see better action in these markets.
Okay. Now talking about some other activities, we can talk about some sectors which are in limelight. I think consumer durables is up, and some of the major gainers are Rajesh Exports, Bajaj Electricals, Titan Industries, Videocon Industries and TTK Prestige. Consumer durable sector is doing up.
Yeah. See, if you see today's market, after the RBI policy, you see the private sector banks like Axis Bank, ICICI Bank have gone up. I see Axis Bank trading about the 1500 mark after a very, very long time.
Right.
So the interest rate sensitive sectors are picking up. Personally, I would say that one can look at PSU banks where the valuation is still attractive for investment.
Okay.
Regarding the other sectors, if you see the economic recovery picking up in India as well as abroad, then metals also should do well. Here, if you look at Hindalco, Hindustan Zinc, they have come down substantially in spite of good results, so they look good for investments. And another sector that can benefit from the interest rate, that has come down and expected to come down over a period of time could be the construction segment.
The realty
where
sector,
also,
yes.
Yeah.
Yes, I have some
realty
gainers here. There is DLF, which is up by about 4 points. India Bulls Real Estate, Parsvanath Developers, Phoenix Mills and Godrej Properties. All these are trading up.
Yeah, so these are some of the companies. I wouldn't like to name them because it's very important to study each company individually and see how they perform. But reality as a sector, and as long as the company has got good corporate governance, you can expect these companies also to do well because they have been beaten down substantially.
So right time to invest in the realty sector.
Yeah, selectively on good companies which have got very good bottom lines as well as very good transparency in respect of their operations.
Right. Also, I wanted to just clear one thing, talking about banks who gained after RBI's policy. It was HDFC which was trading down.
Yeah, today HDFC is trading down.
Even yesterday HDFC was trading down. Yeah, that's a simple thing. Normally, in anticipation of some policy action, these interest incentives tend to go up. And SBI had gone up beyond 25.20, 25.40. So when actual announcement came of a cut by just 25 basis points, just a routine profit booking, I expect the bank again back to 25.20, 25.40 and beyond in the coming weeks. All right. Which banks do you suggest, Dr. Sundararajan, to invest in?
See,
all banks are doing good right now.
All banks are doing well, but in the private sector space, the valuations are stiff, like whether it is Axis, ICICI, HDFC, the valuations are very high. Therefore, you can look at PSU banks. Obviously, State Bank of India will be the first preferred choice there.
Right. And what will be your advice for small-term investors?
Don't worry about day-to-day fluctuations. The long-term outlook continues to remain good. Finance Minister is very serious about a serious budget which will be good for the economy. So I am confident of bull market in the coming days. So invest systematically, invest regularly, invest in large-cap companies based on good performance.
And small investors? Any stocks you prefer for small investors?
Like I said, stick to large cap companies, don't get into smaller ones. Some of the companies which have come out with extremely good results this quarter like Maruti, Infi, some of the metals like Hindalco, Hindustan Zinc, some realty companies, public sector banks like State Bank. Stick to large companies.
Right.
Larsen & Toubro is down today nearly 2%. Nothing wrong with the company. You can consider these for investment.
All right. So pick up large cap companies. That's the advice coming in from Dr. D. Sundararajan. Thanks very much there, Mr. Sundararajan, for joining us and giving your views on the market. With this, I wrap up the business edition from Mumbai. But before we end, let's take a quick look at the headlines once again. The Department of Telecom is likely to issue final spectrum auction document today. Finance Minister P. Chidambaram says no reason to deny bank license to qualified companies. Trade between India and Pakistan resumes after a halt of 20 days. Indian equities continue to trade flat amid volatility ahead of FNO expiry tomorrow. Consumer durables and realty space continue to trade higher, but FMCG and power witness a fall. Crude oil prices mixed in Asian trade after hitting multi-month highs on the back of upbeat housing data in the United States. And that's all we have in today's business edition. Thanks for watching. For more updates, you can log on to our website www.ddinews.gov.in. Your suggestions are very valuable to us, so post your comments on the social network facebook.com. News and updates continue on DD News. Next is Samachar in Hindi. Namaskar.